The big Indian budget 2022 is finally happening on Tuesday, 1st February 2022. You must be eager to find out what reforms could be announced for the upcoming financial year FY 2022-23. Will government announce some income tax relief? Will e-invoicing under GST be extended to small biz? Will real estate be in focus or healthcare continue to grab attention of Finance Minister Srimati Nirmala Sitharaman? All your queries will be answered in this video. Hello and welcome. I'm Annapurna from the makers of ClearTax. It is India's largest tax and financial services platform. Clear serves more than 3,000 large enterprises and more than 4 lakh growing businesses. Do subscribe to our channel to get clear explanations of the upcoming Budget 2022, GST updates and other finance concepts. Now, let's begin with much talked about income tax changes expected. Top expectations in income tax law. Crypto. The nation wants to know about cryptocurrency taxation, especially under income tax. While the government is waiting on the cryptocurrency bill, we expect much needed clarity on its taxation in the upcoming budget 2022. Whether it's a capital asset or anything else, its tax rates, will government levy TDS or TCS on the sale and purchase of cryptocurrencies above a certain threshold, etc. Next on the list, we have a possibility that the personal income tax slab could get revised this time. Many experts have opined that two tax regimes, old and the new tax regime, continue to confuse a common salaried person. Since many citizens are into some sort of savings and investments already, the new tax regime is proving to be not so useful. Considering that the previous budget 2021 did not have any major relief to the salaried class, we can expect relief this time. Moreover, we expect a reduction of the concessional tax rates till Rs 20 lakhs and introduction of work-from-home tax-free allowances for salaried employees. Further, we expect an increase in the standard deduction from Rs 50,000 to Rs 1 lakh. It is due to high direct tax collection that the government could achieve this fiscal. Moving forward, we expect Section 80C limits also to be revised for the same reason that the government registered a notably high direct tax collection this fiscal. A higher deduction under Section 80C may be permitted for the Equity-Linked Savings Scheme or ELSS to encourage more mutual fund investments in India, or it can consider defining a separate limit also for it. On the other hand, we could also expect a special COVID expense-related deduction to be allowed under Section 80D or 80DDB to provide tax relief for COVID-19 patients and their families. Further, for businesses, we expect the removal of current limitation of once-in-a-lifetime migration from one tax regime to another to offer them better flexibility in choosing different tax regimes. Key expectations in GST law. Under GST, we look forward to the government announcing 3 key changes. Let's check them out one by one. First on the list is reducing e-invoicing applicability limits. We expect the government to announce a reduction in the e-invoicing threshold turnover limit to apply below Rs 50 crore, maybe above Rs 25 crore. It brings in more transparency in recording sales, reduces errors and improves compliance, also makes businesses more agile and weeds out regulatory delays in supply chain operations. Reducing the limits will not only benefit the newly onboarded small and medium businesses, but also the large enterprises who partner with these small and medium businesses. It will ensure that they are claiming accurate and genuine input tax credits or ITC. It will make sure that all B2B invoices are timely uploaded onto the GST network via the IRP. Moreover, it will allow small and medium businesses to leverage invoice discounting as alternate, safe and faster financing options, thus increasing the flow of working capital to businesses. There is a need to set up robust systems so that there is smooth implementation of e-invoicing system among the small and medium businesses if they are notified. Initial cost will be incurred for these system setup and testing. Government should provide sufficient time and provide the necessary support resources needed by them before launching e-invoicing system for small taxpayers above the expected Rs 25 crore limit. Before I proceed, do let us know in the comments below your top expectations from the upcoming budget 2022. We are eager to read them as well. Next on the list is the introduction of reverse charge based mechanism for pushing GST compliance. To improve overall GST compliance, to boost the revenue collections and ultimately expand the taxpayer base, the government should introduce a new reverse charge based mechanism. Under this, large taxpayers with turnover exceeding Rs 100 crore or Rs 500 crore will pay their GST dues to their small vendors, say vendors with turnover less than Rs 5 crore, directly to the government. For example, a large manufacturer XYZ Limited frequently purchases from supplier ABC. Supplier ABC is a small-time business who finds the entire process of monthly computations and tax payments cumbersome. In this case, XYZ Limited will directly pay the GST amount on ABC's invoices to the government. Likewise, XYZ Limited does this for all its small suppliers. For small businesses, their tax compliance burden drastically reduces as they no longer need to make that monthly GST payments, since all their large enterprise customers directly remit GST to the government. All that the small businesses needs to do would be to file a quarterly or even a half-yearly statement declaring their revenues and paying any balance tax amounts, if any. On the other hand, for large taxpayers or enterprises, one of their biggest challenges of dealing with small vendors is that these vendors do not upload invoices on time, leading to unavailability of input tax credit. Now, by directly uploading the invoices and paying GST, they can smoothly claim input tax credit as well as reduce their administrative burden of following up with small vendors. You may wonder that it could be an additional compliance burden for large enterprises. Absolutely not. Large enterprises already have most of their documentation automated. Similar to their sales transactions, their purchase transactions too can be filed with the government with a click of a button. Even if it is marginally more work, the fact that they no longer have their working capital blocked in input tax credit claims is a sufficient reason to remit GST on behalf of their small vendors. Furthermore, the government gets its dues on time. Third biggest change recommended in the GST is to introduce annual revised return for correcting the mistakes in filing GSTR 9 return, especially for B2B transactions. It will resolve a lot of issues. Sectoral expectations. To begin with, the first one, healthcare sector. It is pushing the government to increase spending on genetic research. Experts in the field are further urging the government to promote genome mapping projects and allocate funds to develop resources to monitor the genome-related health status of the population. Some such means include the promotion of public-private partnerships for genome mapping projects. Moving on to the second one, real estate sector, which is still yet to get the push required to liquidate projects that have been stuck for a while. The general expectation is that this budget will incentivize both rental housing market and the affordable housing sector. One measure asked for this is to decrease the TDS deductions on co-working space from 10% to 2%. Another measure that will help recovery of the sector is a GST waiver on under construction projects and raw materials like cement, etc. The incentivizing of private investments in affordable housing sector will also give the sector much needed boost. Moving on, while the government has deferred the increase in GST rates, the textile industry is facing several other challenges, and one of which is the rising price of cotton due to high level of exports. The sector has urged the government to introduce an export duty on cotton to check the prices. They also urged the government to remove the 5% import duty on raw cotton. This move will also help stabilize the costs and increase cotton imports into the country. We have come to the end of this video. If you are new to our channel, subscribe right away to stay tuned to catch all the action on upcoming Union Budget 2022. Thank you.